Hi, everyone. It's PJ Patterson here for Market Update. Today is Monday, the 29th of November. Happy belated Thanksgiving to any of you out there who might have celebrated Thanksgiving. I know I did not. It's not a holiday that I really celebrate anymore unless I was in the U.S. visiting family. Great holiday, by the way. Lots of football, lots of food. Just, oh man, brings back great memories. Set the Christmas tree up. Love it. Anyway, we had a big week last week. It was a short week because we had the markets either having abbreviated trading hours or they were closed, obviously, on Thanksgiving Day in the US. And then we had abbreviated trading hours on Friday. And of course, we got this dreaded announcement that we were probably all fearful of, which was there is another variant that is coming out of Africa. The Omicron, I think they've coined it the Omicron variant of COVID. No evidence that it's deadly beyond what we already know about COVID. No evidence of anything whatsoever. But what does the market do? It completely shits itself. It pukes massively. Um, and so we've had a very rough Friday of trading with this whole specter of Omicron variant hanging over our heads. And a weekend, thankfully, for it to sort of I guess information to come out and people to talking heads to get on TV and say stuff about it and whatever. But the reality is nobody knows anything about it. And for that matter, this virus, not that I'm a scientist, but the virus mutates and it's going to continue to mutate, and because that's what viruses do to survive. In any case, what I want to address is the opportunity that this has given us in the market. So when these things happen, and many of you who have been watching my videos now for over a year, you know that we will occasionally get these episodic and non-trending bouts of volatility. And that's exactly what this was on Friday. It was a huge spike, huge, like massive. I'm going to show you a chart on that in a moment. Spike in volatility in oil, in the S&P, in tech, in the Russell. And a lot of that was driven by the fact that there was very little liquidity in the market. So I think I've got it just here. Nope, that's not it. Sorry, there's another thing I wanted to find and show you. There it is. So there is a table of the volume on the U.S. stock exchange for the 26th. And it's not actually the volume amount, it's the volume day over day, month over month. And you can see it was down almost 50% because everybody was on holiday enjoying their Thanksgiving. Plus, it was a shortened trading day. So what often will happen in situations like this, when you have very, very low volume, it means that there's very little liquidity. And if you get some newsy event like we had, and this is just completely newsy event, then it creates these 1 to 2 standard deviation type moves. It creates a move that otherwise probably wouldn't have happened if it was a normal trading day with everybody sitting at their trading desks trading. So what that means is that some opportunities have come up. And I just want to show you, I keep having the bubble bounce around. Let me see if I can get it back over into this one. There we go. So, one of the things I talk about are the implied volatility, premiums, and discounts. And what has occurred now is there are some eye-watering implied volatility premiums. And for those of you who've been watching for a while, you know what that means. I'm going to be doing when the U.S. market's open. I'm going to be buying a shit ton of stuff because this opportunity it's just been served up to us. We're still, and let me refresh a couple of things for you to reorient you where we are. We're still in quad 2 in the U.S. We're still reopening. The fear is that, of course, this variant is going to somehow derail everything that's going on right now. Somehow I doubt that. Now, the market's going to tell us that over the course of the next few days, but we've already sort of got our answer. Futures are up massive. The European markets, as you can see on this little headline here, they're going to rip to the upside because traders are coming back now, and all the normal market participants are coming back from their holidays, particularly Thanksgiving and that. And they're going to be like, this is ridiculous. This is a buying opportunity. So you're going to have, I suspect, a couple of days of rally because the market has just gotten so oversold. Anyway, again, I just go back to that comment. This is episodic and non-trending volatility. And when those spikes occur, what we've done over the past, well, pretty much almost every time they've occurred, is I have bought securities. And I'm going to be buying in the things that we want to own in quad 2. So I'll probably hit energy. Energy got smoked on Friday. Oil was down something like 10% or 12%. It's just was horrendous. And of course, what happens is people shoot first and they ask questions later. They just jettison positions because they think it's the end of the world that's coming, and they jettison the position. And because they're doing that into low volume and no liquidity, it just makes it even worse. It's an outsized move to the downside because of those other factors. So just to check in on volatility, the VIX, as you can see, I mean, that is a massive spike. It just opened, well above where it closed. There's a gap open there. That's what that gap is. They call that a gap open, and a massive spike. So we haven't seen a vol spike like that, well, since back here in September. And you may recall back in September, we had a vol spike. Can't remember what precipitated it, but had the vol spike. And then, of course, look what it did. It just came right back down. We then had a little bit of volatility come back in the market, but nothing that was to be concerned about. We were still in, even in this point of vol, in the sort of investable bucket. We were at the bottom end of the trader bucket, being in now in the last, the last 2 months almost, in the complete investable bucket. So what's really happened now is we've jumped back up into the traders bucket, and we'll see how quickly this vol spike fades back down into this range. I'll be curious to see how quickly that happens. I give it by the end of next week, and we should very well be back into hopefully the very low 20s, if not the high teens, and maybe even the mid teens. We'll see what happens. A lot of the stuff that goes on in markets like this is driven by news, and that is an emotive or emotional response to fear. This is fear. You've just experienced, if you were watching any of the market stuff on Friday, you've just experienced how the market deals with fear. And that, my friends, is how good investors get positioned, is to take advantage of these sorts of opportunities. Now, on that particular score, I had been selling down some energy positions. I had been raising some cash, which is great because it means that I have cash to invest with when this sort of thing happens. Did I see this coming? Absolutely not. No way that I'm going to sit here and tell you that there was going to be some announcement and we're going to get this massive vol spike and a big sell-off in the markets. But again, this is the process that we go through under the full cycle strategy and process. Is we want to feed the ducks. We want to sell into strength so that when buying opportunities present themselves, and they always do, that you have some cash to actually buy some stuff back with, either buy it back or plant new seeds in other things. So I really just wanted to get a short market update out today. I don't really have a top 3 things because, again, last week was so discombobulated because of the markets being closed a couple of days, and always around holiday periods you get people taking extended leave and just things quiet down effectively. But obviously, because of the massive spike in volatility and then the big sell-off that we had, it's important that I leave an update to just give you that sense of, I got it. I know exactly what to do about it. And there's nothing that's changed in any of the numbers or any of the even narratives around quad 2 transitioning potentially into quad 1 next year, etc. So with that in mind, I'm going to have it again be just a really short update. As we get into this week, if there's more to say about this, I'll certainly leave another update. But for now, rest assured that we should see a pretty nice bounce over the next couple of days, and I will be buying into this opportunity that the market has served up. So have a great start to the week, and I'll talk to you all again probably by the end of this week with a further market update. Take care.